David and I tangled on my site, and then probably a year later, I saw the light. I thought he was wrong to begin with, but when I saw the light, so fast forward probably 2 years after that, I think at the Value Investing Congress in California, Bruce spoke, and he's a great speaker, and the company he was presenting on was St. Joe's. Now, he's had a rough year, this past year, but he's had a great track record. And I'm sitting there listening to Berkowitz on St. Joe's. By this time, not only have I sold my position, but I've gone to the other side thinking that, this company, if they can't convert this land into cash, they're not going to go anywhere. And Bruce was making some of the same points about the value of St. Joe's that I had in my blog years before. Points that I had come to see as a bit too simple. It's beautiful land. It's within 10 miles of the Gulf of Mexico. It's in Florida. They're building an airport near there. All these things that sound great, but until you actually see it and do the math, it doesn't make sense. So I was actually a little, like I said, he's a great investor, but I was a little surprised. Some of the comments were, he's not naive, and I'm not saying that, but some of the comments were naive to what I had presumed years before. And I thought, wow, this is going to be interesting, because then it was the very next Congress in New York that Einhorn did one of the best presentations I've ever seen in terms of taking a company down and showing what's really there. And of course, the company got hammered, and it's since recovered somewhat. There's actually a price I would pay for St. Joe's. I've often written that if it was $9 or $10 a share, I'd probably take another run at it, because there is value there, but you got to build in some margin of safety, and it's not. I don't think it's worth $20 a share. I'd pay $9, I'd pay $8, somewhere along those lines. Interestingly enough, in terms of land, I've also been enamored with farmland and getting exposure to that over the past couple of years. One of the names there, Cresud, Argentine company, which ticker symbol CRESY, which is an ADR, and I owned it. For those of you who haven't heard of it, they own 1.2 million acres of land, which is sizable. That's a big, 26 farms, a herd of cattle. They own parts of two other publicly traded companies, one being URSA. You do the sum of the parts on it, it looks pretty compelling. It's a company I bought pretty cheaply, and when it ran up to $19 late in 2010, I figured it had run its course, and I sold. I'll be the first to admit that my timing of sales of a particular name, if it is at the top, it's just dumb luck. I have no magic formula. This one I got out near the top. Wanting to get back in, because it's a nice package of assets. It really is, and it's worth more than the current market cap. So I've been following it, and it's gotten interesting. And the other, last week we see what's going on in Argentina with the takeover of some of the, one of the big oil and gas companies. So my interest in Cresud right there dried up immediately, at least in the near term. And sure enough, it's pulled back. From 13, I think in March, prior to the news of the takeover. I think it was down around 9 the other day. Now, it's a name I'll continue to look at, but when it comes to country risk that way, I'm very uneasy about a part of the world where they're going to take over a natural gas company. It may be a stretch to say they're going to take over a farming company, but too much risk for my blood at this point in time.